Thank you, Mr. Chairman and Commissioner. Welcome.
Thank you.
First, I want to thank you and your department for the great constituent services that are provided anytime a constituent has a problem or question. You and your department have been very prompt to respond. I'd like to ask questions in two areas, one being workers' compensation insurance and the other being the underground storage tank indemnification fund, two really exciting topics for a Monday afternoon after a long weekend. First of all, the workers' compensation area is very robust and competitive in Pennsylvania with a lot of insurance companies, as is evidenced in your introduction. A lot of companies want to play in that market. What do you think is responsible for keeping the rates as competitive and level as they have been for the last few years?
That's a good question. I mean, I think what we're seeing in Pennsylvania, I don't know that it's unique in terms of what we see across the country, and I don't know how long we're going to see this, but I do think we're certainly benefiting from decreases in some cases and certainly no increases. So I'd have to look into it more to come up with some really good ideas in terms of what's causing that, but we're certainly pleased with the result.
I think some of it relates to maybe the legislation that's been passed by the General Assembly over the years with panel of physicians and cost containment and things like that, safety committees and whatnot. But one of the things that has been interesting as the various departments have come through is they are complaining about their own internal costs for their departments as far as the workers' compensation charge. And one department in particular, I think it was the LCB, in one of their press releases early in the year said that a actuarial study done for the Department of Administration said that there was an increase or under-reserving of $750 million, and that needed to be made up and thus charged all the departments. And the rates being charged to various departments are significantly higher than what are being charged in the private market. Something that, you know, we're proud to keep those low, but now taxpayers have to pay these differences. So my question is your department, since you monitor the insurance companies for financial solvency, does your department ever look at or have been asked to look at the self-insurance plan that the state employees are covered under? Do you know if that is the case?
I don't know, Representative.
Okay. If not, since you're doing such a great job regulating the private marketplace, it might be something you want to look at to determine whether or not the studies that have been done and presented to the administration are actually accurate and those costs are being passed on to the taxpayers are appropriate. As far as the underground storage tank indemnification fund goes, in 2002 there was a loan to the general fund of $100 million. And it's my understanding that that was to have been paid back in 10 years, and I think that's been extended to 2029, and what the heck, why don't we just extend it forever and not pay it? How has that impacted the fund? I did notice that I'm reading your report, which was dated March of 2015, which I assume the next annual report should be coming out soon, that the fund's doing very well. In fact, Aon Global Risk Consulting concluded that the underfunded liability of $139 million as of June 30th, 2014 was a significant reduction from the $196 million from the year before. So I guess in a roundabout way, I'm asking, does that $100 million have an impact? And since the department, the insurance department of this fund, I should say, is issuing grants to DEP. This was before, I think, you became commissioner in 2014. $6,600,000 in grants from that fund were given to the DEP. The fund seems to be pretty solvent. And maybe we should be forgiving loans to the general fund if there's a possibility to do that. What are your thoughts on the fund?
Well, Representative, and I think the unfunded liability has gone down even more. I think as of the end of the year, we're at about $132 million. So we do see some progress in the unfunded liability. And in terms of the repayment of the loan, even without the repayment, at least today, USTIF is able to pay their administrative and claim payments for the foreseeable future without an impact. I certainly don't want to speak for the USTIF board in terms of the future of the loan and whether it should be repaid, but it's not impacting our ability to pay administrative and claims expenses at this time.
Am I right that the fund gets their money from a penny or two on gasoline tax? Is that where that comes
I
from?
think that's right.
Is that right?
Yes.
And it looks like the amount that comes in is enough annually to pay off approximately what's been going out, give or take a couple million either way, depending on the year.
I think that's right.
Okay, I think, has the new report been published yet for 2016?
Not yet.
Okay. All right, thank you.